Hello and welcome everyone out there, and welcome to the Personal CFO's Expert Speakers Series. We've got a really great session to work with you through today on planning for business owners with children in the business. For those that aren't familiar with Advice to Advisors, I'm Daniel Collison. I'm managing partner of A2A. My partner and marketing director is Tina Carthageser, and we're a training, coaching, and mentoring firm for financial advisors only. And we're bringing this to you today to help introduce you to some of the experts that you need as you take on that personal CFO mantle. So to give you an overview of this, Professor Moshe Milevsky out of Schulich School of Business a few years back wrote, "Are you a stock or a bond?" And in that book, he posited the idea that individuals should treat themselves like corporations do when it comes to their personal finances. As we're all aware, corporations are built to be very effective, very efficient, and what Moshe called You Inc., You Incorporated, has the concept that you treat yourself as a small, tightly controlled, privately held company, and that you work accordingly. In fact, that you as the individual or as a couple take on the CEO, the CFO, and even the chairman of the board role to really run your finances effectively. However, unfortunately, as you're all well aware, most individuals don't have the time, they don't have the capabilities, they don't have the knowledge, and really they don't even have the inclination to learn all that they need to learn within personal finances. It's just too overwhelming. Thus, we are in business, and financial advisors that really want to take control of their clients' full financial wallet, that want to be able to support their clients fully without the threat of competition coming in and chipping away at their clients, really can look to this model and build a wall around and keep out the competition. So we look at the clients, and again, under Moshe Milevsky's concept of You Inc., they are the CEO, or if it's a couple co-CEOs, you as the financial advisor take on that personal CFO role. You're the one that's going to help them qualify their goals, the who, what, where, when, and why of their goals, and then help them quantify their goals, bringing time and money to the equation. So once we've got those two variables, we can actually build out the strategies. We can figure out what rate of return you need to achieve on your investments to actually achieve whatever goals you're working towards. But what we do know is that any advisor in this role has no capacity to learn everything and supply all the knowledge and the wisdom that they need to do so for their clients. So they have to have these 5 noted experts to work with, first of all, to help build out strategies or structures for their clients, to bring that information to the table, put it into the financial plan, and then, where necessary, bring the experts to help actually implement some of those strategies. Obviously, looking at all the different elements within these specialists, within these experts realm, we can see that it's not possible for anyone to have all of the knowledge that is required. Thus, the personal CFO model absolutely allows for that financial advisor to bring these experts to the table and help with the planning that they're doing for their clients. And a great quote that comes from an advisor out of Ottawa, as he would say to every new client, if it's got a dollar sign in front of it, give me a call, which means with this backing, with all of these experts, you never lack the confidence that you can't answer every single question that comes at you. And in fact, when you can't answer them directly, your response is very simple. It's like, great question, never heard that one before. I will get you the information in the next 24 to 48 hours. Then you go to your expert, get that information, get it to your client, and take care of what needs to be done. So again, this helps build the absolute confidence of the financial advisor, but it also certainly builds the confidence of your clients when they recognize your capabilities thanks to all the experts that you do work with. Now, taking the expert knowledge that you can have by working with these experts, you can get out to market and you can effectively and confidently actually prospect to the type of client that you're looking for, your ideal client profile. And in today's session, we're talking about dealing with with professionals or business owners that have family members involved in the business. And if you're out prospecting, one of the easiest ways to get somebody motivated to actually sit down with you and talk about specifics is just ask them technical questions that they almost never can answer. Something like, has anyone ever shown you how a debt swap works? And when they say, well, what's that? Well, it's a way of turning non-deductible debt into tax-deductible debt. Has anybody ever shown you how leveraged life works? The way of using permanent insurance to borrow tax-free in retirement and not have to tap into some of the taxable assets that you might have. Another question, has anyone ever shown you how an estate freeze works? A Section 85 or 86, and when they say, well, what's that? Well, it's a way of restructuring your corporation whereby you can pass down common shares to a spouse, to your children, or even grandchildren, but still maintain full control over the company. But as we're going to look at today, a great question, to the right marketplace, has anyone ever shown you how a personal pension plan works? And we know that for the most part, the person you're talking to is going to say, no. What is it? How does it work? And your response is, well, why don't we grab a coffee? And nowadays with COVID, why don't we grab a virtual coffee? And I can take a look at your situation and see if this makes sense for you. What's better for you, a morning or an afternoon to do that? Let's look at the time next week and we can set up a Zoom meeting, a Skype meeting, whatever it is. So with that in mind, I'd love to introduce you all to Jean-Pierre Laporte. He's the CEO of INTEGRIS Pension Management Corp. So take it away, JP.
Well, thank you, and welcome everyone. So today we want to talk about how to pass wealth from one generation to the next in a family business utilizing personal pension plans. But before we can even get into that, we have to look at the big picture and realize that personal pension plans have a number of advantages over the traditional RRSP, which is well known and which has been around forever. So if we look here at these different advantages, you can see, and I'm not going to get into them because there's just too many and it really warrants its own training session. But there's one in particular on the next page that I want to focus on, which is, I think, number 13, or no, sorry, it's number 15, which is the intergenerational wealth transfer to family members in a business. So if we move on to the next slide, we'll get right to the meat of the matter. So what a personal pension plan allows a business to do, a family business to do, and here I'm talking about a business where maybe there are 2 or more generations working in it on the payroll. So if you look at this family business, there's mom and dad, been around forever, have started the business, and they've allowed their children to join the family business and put them on the payroll. So what the financial advisor would do in that case is offer a family PPP. So if we look to the next slide, you can see that since everybody's on the payroll, everybody gets to contribute to this family plan. And again, if you look to the next slide, you can see that at some point in time, mom and dad may decide to retire from the business. They may want to pass the reins to the next generation. They're still shareholders. They're still collecting dividends, potentially. But they're no longer actively involved in the business. And so they might go on pension. So the pension plan would start paying a monthly retirement benefit out of this communal pool of money, which is this family PPP. But if you look at the next slide, disaster could strike. Mom or dad or both of them at the same time could pass away. Now, had we been in an RRSP or a RIF, we have a massive problem. We have a deemed disposition under the Income Tax Act. So the Income Tax Act deems the assets of this RIF or RRSP to have been disposed of one day before the death of the parents. So now the estate has to pay at a top marginal rate a massive amount of taxes to the tax authorities. But we're not in an RRSP. This is a PPP. Unlike those types of plan, the PPP doesn't create a deemed disposition in this circumstance. So if you look to the next slide, you can see that upon the death of mom and dad, the monies that were earmarked to pay their monthly pension now becomes pension surplus. It's trapped inside of this account. But the children are also plan members. So what happens is now, by operation of law, they have a right to draw on that surplus that mom and dad left behind to fund their own pension liabilities. So they can put money aside for their own retirement. So we bypass the deemed disposition. And as a bonus, even under provincial laws, we bypass the probate fees. So we don't even have to pay any tax. So let's take a quick numerical example just to give you a sense of how powerful this solution could be. So imagine that a PPP has $4 million in assets by the time the parents pass away. Now, if we didn't do a PPP, we have the deemed disposition. And in Ontario this year, the top marginal bracket is 53.5%. So on death, there's less than $2 million left behind for the children or the beneficiaries. But if we have a PPP, because the family members are working in the company and are on the payroll, the entire $4 million is left in the PPP. Well, one takeaway from this is if you were able to provide a solution like this to clients, the likelihood that the kids are going to fire you because you used to represent the parents is probably less. I mean, I don't know, but that's what, and for sure, there'll be more assets in the management for the advisor that's in charge of the file. So, like I said, there's so many things to talk about. We only skimmed the surface and only focused on one of the 20 advantages that PPPs offer. I would encourage you to go to our website or send us questions, and I'll pass it over to Daniel.
Oh, thanks, JP. And obviously, this is a huge topic with absolute phenomenal opportunities for those business owners and their children in the business. And this is one of the reasons you want to take on that personal CFO mantle, because you bring behind you these experts such as JP and his firm that can actually not just bring information and not just knowledge, but actually the product, the implementation of the strategies and the structures to get this to work for your clients. And JP, I know you've used the term Trojan horse in the past when I've heard you speak. Do you want to talk to that for a moment?
Sure. So for those who are rusty on Greek mythology, the Trojan horse was used by the Greeks to get into the city of Troy, and they sacked the whole city after. So we use it in a different context of if you can get the door open. Let's say you're trying to get a family business to become your client, and you bring them something they've never heard of, like the personal pension plan, and you help them with this, let's say this intergenerational wealth transfer issue that we talked about. That creates trust. And they might then say, well, gee, since you're managing half of my monies, why don't you take over the rest of my RSPs and maybe some non-registered accounts? And gee, maybe I should ask you to look at our insurance package to see that we're well covered. And so little by little, the investment advisor ends up grabbing the entire wallet of this business owner, not just the PPP assets. So that's why we call that the Trojan horse.
Yeah, and it's a fabulous way, first of all, just to start the dialogue with the business owners, with the professionals that can actually use this. And again, we don't know whether or not they're able to use the PPP, the estate freeze, leverage life debt swap. We don't know that until we sit down and go through a discovery. But the fact that you've asked them questions that they've almost never heard about gives you the opportunity to speak with them. And that's when you start with your magic. Sit down with them, talk to them about what you do, and you can show them that you actually work from that personal CFO model, that you've got experts, such as JP and INTEGRIS Pension Management Corp behind you. You've got so much strength, you've got so much confidence, and again, that gives them the confidence to move forward with you. So by all means, please do go to INTEGRIS Pension Management's website, get the questions answered that you have. If you're not connected with us, we'd love to do so either on LinkedIn, Facebook, YouTube. But by all means, look to that personal CFO model, look to the experts like INTEGRIS, and start taking advantage and take total control of the full financial wallet of your prospects and clients. So until next time, stay safe, be well. Thanks very much for coming out. Thank you, JP, and we'll leave you until the next time. Bye for now.